Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news for October 5th. Let's get started with the charts. Ouch! If you could see it, this is actually red. It's not showing up like that on your screen, but it's actually red, meaning we opened all the way up here and now we're trading below 103. We're currently at 102.97. This is not good, guys. We have only dipped below, we dipped below once, opened below 103, and you can see how many times we've been touching this floor of support at 103. So now we're actually trading below it. So this isn't really good for us. Our support was 103. Our next floor support is going to be down here at 102.80, and our resistance is all the way up here at about 103.20. So I'm sorry, I know that's a lot of numbers, but you know what it's going to boil down to is we're trading below 103, our first line of support. So that means we could fall all the way down another almost 20 basis points. So this was due to factory orders and jobless claims and the challenge of job cuts. But the jobless claims came in about $5,000 less than projections. So this is really good for the economy, but again, not so great for bonds. So the other thing we have to watch out for tomorrow that could be a game changer is non-farm payroll numbers. So here's where I'm at. To kind of quantify, Freddie released the September averages. They said the average consumer in September received a 3.81 interest rate and paid a half a point to get it. Well, if you look back at the averages for September, bonds were trading about 103.40. So to kind of quantify where we're at now, if we were on average trading up here and now we're all the way down here, we're about 43 cents worse. So that means if the average consumer was paying a half a point, they're likely going to pay almost a full point now for that same rate. So we are seeing market really kind of sell off a little bit. And I got to say, we got to be careful of this right here. If we do close below 103, that means our new support level, this red line is going to move down here, and this green line is going to move down to about right here, 102.60. So we could see a market shift and perhaps even a downward trading channel that would develop, bringing us out of this neutral or flat trading channel that we have been seeing. So we got to be really careful here. So here's my advice. Well, let's take a look at the analysts, then I'll get you my advice. My last projection was a hit. I did project actually the same as I'm going to project right now, 102.80 to 103.20. So so I'm going to maintain that, meaning that from where we're trading out right now, we could get about 17 cents worse or 23 cents better. I'm a little bit nervous on the market, especially ahead of non-farm payrolls tomorrow. So the analysts are a little nervous too. Both analysts are consistent. They think they're going to go a little neutral on short, but they are inconsistent. On the long term, so over the next 30 plus days, they do think that rates could actually end up getting worse. So, and I have to agree with them, but I would say in the next week, I don't think it'll get too much worse than where we're at. I think if we do close below 103, we're going to see 102.80 to 102.60. But I'm going to throw my projections out through next Thursday and say, hey, bonds can get about 17 cents worse or 23 cents better. So, but a lot of that is going to stem where they close this afternoon, 2 p.m. Pacific time. So anyway, that's it for now. Sorry, I know that's a lot of mumbo jumbo, but I would say if we boil this down into English, if you're thinking about locking in your interest rate, consider waiting until 2 p.m. Pacific time to kind of see where the bond market closes. And if it does close below 103 even, I would say if it was me, I'd probably lock in to be safe. Okay. So anyway, that's it for now. But we'd love to hear from you. So you can leave those comments down below. Don't forget to hit like before you leave this page. Hit that like. It never hurts. And if you want to subscribe to the channel, you can click the guy on the left. And that'll just get you a little update when we release new videos. And if none of this made sense to you, it's okay. Mortgage Bonds 101, it's video at the top right. Click that, and then I'll show you how bond market actually impacts you as a consumer getting a mortgage on what kind of interest rate and fees that you're going to pay. So it's really good educational video. Anyway, that's it for now, guys. We'll see you next Thursday. Have a great weekend. Okay, bye-bye.